Oh boy, I am so excited for today's YouTube video. My name is Salvador Briggman, and on today's video, we're getting into equity crowdfunding investment statistics. Statistics are so fun, so exciting. It's one of the things that actually got me into this industry back in 2012. Quick side note, I was in my dormitory at George Washington University. It was snowing. There was a snowpocalypse actually, which happened around this time of the year. And I was just thinking, what should I do my econ thesis on? What should I do my econ thesis on? And I had to study this. I had to do this whole like mathematical, statistical, logistic regression when it came to the study. And I was like, you know what? I'm gonna do this on equity crowdfunding. But the problem was that it was so hard to find data on equity crowdfunding. At the time, 2012, the Jobs Act had just been passed, right? It was so hard, there wasn't enough data. So I ended up having to do it on Kickstarter, where I cover the different categories available on Kickstarter, comparing the success rates that go into a successful campaign and doing a logistic regression to see the impact of certain variables like your social media size compared to maybe like the length of your video and how that actually impacted the success of your campaign on Kickstarter. So we're getting back to the original stats, which got me into this industry, which is equity crowdfunding. So we're talking about that on today's video. This is more like a fun video, getting into some of those stats. I hope that you enjoy it, and we're getting into it in just a second. All right, man, welcome back to this video. Again, my name is Sal, and I think this is one of the coolest things that we can talk about because this kind of data information was not available publicly before. And also, we think about this as one of the easiest times in the history of humanity to be able to raise money online. And I think about that, and here being in Miami, Florida is one of the coolest opportunities which you have available to you is to be able to get something out there to the world to impact people worldwide, whether you're living in Miami, whether you're living in California, whether you're not even in the United States, you're in Canada, right? You can use this to your advantage to be able to raise funding from the crowd. So let's talk about equity crowdfunding here. So this is one of the pieces which is actually put out by the Crowdfunding Capital Advisors. So this data is put out by the Crowdfunding Capital Advisors by Sherwood Neese. He has been a long-time proponent of the Jobs Act, of equity crowdfunding. I really respect the guy. So I hope that if he gets this video that he knows that I obviously enjoy his work. So I wanted to kind of go through one of his newsletters where he put out some really great data and information. We can kind of talk about it on this video, and we'll have this appear on the screen. So what this study was it went into how people invest in startups via regulation crowdfunding, also known as equity crowdfunding, and what age demos those people tend to be in. And I think this is actually really interesting because I've been having a lot of clients of mine who are running and launching equity crowdfunding campaigns, and they're like, Sal, what is the age demo, right? When it comes to these people that are investing in new startup companies online, which previously you couldn't really do that. So this really opened up the floodgates. Now, all the time, people are investing in these campaigns. So let's kind of break this down. There's this really great graph here, and a lot of people are now calling this a pre-IPO. So IPO, initial public offering, going on the stock market and selling your shares. Technically, they're secondary shares, which are being traded on the stock market, right? You may know doing an issue that way, or Reg D was another common way of raising funding. Reg A, which recently was kind of revised. There's now regulation crowdfunding. And regulation crowdfunding is kind of synonymous with like pre-IPO when it comes to investment. So we look at this graph, breaking investments down by age brackets here. First of all, we have total investors on the left. And then on the right here, we have percentage of dollars invested. So on the left here, we have at 6.1%, we have 70 plus age demo. We then have 12.7% at the 18 to 29 age demo. We then have in yellow, 19.8% in the 50 to 59 age demo. We then have 24% jumps up, 24.2% in the 40 to 49 age demo, 25.5% then in the 30 to 39 age demo, which is the age demo that I'm in. And then you have the 11.7% at the 18 to 29 age demo. And this also corresponds to the percentage that has been invested in equity crowdfunding campaigns. So if we think about this, actually, if we combine the 50 to 59 age demo, which I know people are like, oh, I'm getting so old, I'm getting to be 50, right? Dude, you're still in your sweet spot. You are still in the prime to launch a startup, to invest in startups, man. 50 to 59 and also 40 to 49, they actually comprise the around 50% in terms of the amount that has been contributed or invested in startup companies. And then if we add in 18 to 29 and we add in 30 to 39, that kind of comprises the next bit here. So the first takeaway from this graph is that the biggest age demos are, again, 30 to 39 and 40 to 49. So basically, if someone's going to be investing in your startup company, they're probably going to be between 30 to 50 more often than not. However, I would still say that the 18 to 29 is actually relatively sizable, right? When it comes to the total percentage number of investors. The smallest being 70 plus, they're probably like, ugh, going after retirement, don't need to invest in these new kids startups anymore. You know, I'm not trying to be Colonel Sanders or anything like that and build a massive empire when I'm 70, okay? I'm just trying to retire, go play some golf, right? Go to the beach like people do in Florida. And then you have people that are, 18 to 29, and 18 to 29 was 11.7%. Sorry, I misspoke there. 18 to 29 is 11.7, and 60 to 69 was around 12.7. So they're about the same. 18 to 29 and 60 to 69 kind of comprise around a similar amount when it comes to that. So it'd be like young people, hustlers, young business owners. Dude, the other day I had a call with a guy who was 18 years old, and he was starting his own company. That is so cool. I've had actually calls with people that are even younger, that are 16 years old, that are 17 years old, that are starting their own companies, that are investing in companies. It is so exciting that today's youth doesn't want to go out there and party, but actually wants to buckle down, build a business, support their family one day, right? That is so inspiring. And I love that aspect of America and also this planet, right? People all over the world are doing this as well. I've had coaching students in the Netherlands. I have coaching students in Australia. So it's really cool that this is happening just internationally. Okay, so the other thing I want to take away here really quickly, so if you're going to be going after investors, I would say keep in mind that sort of the biggest categories are going to be between 30 to 69. 30 to 69. So you got to make your pitch. You got to make your what it is that you're doing appealing to that kind of an age demo. That's probably going to be the sweet spot when it comes to your investors, people that are going to be participating in your equity crowdfunding campaign. Want to take all the stress out of fulfilling your Kickstarter rewards? Fulfillrite is the turnkey solution that puts product delivery on autopilot. The Top Campaigns uses trusted high-tech provider to store, package, and ship their products. Focus on growing your business. Leave shipping to the experts. Don't wait. Get a custom quote from Fulfillrite today. Link in the description. Next, I want to get into the average check size, which varies based on the actual age that someone is in. So the age demographic. I will also say here that I don't think this is necessarily behavioral as much as it could be also life circumstance. As you begin to get older and wiser, and I start to see some gray hairs, right? Your income also naturally starts to go up the more expertise that you have. If you pursued an MBA, or you're becoming a doctor, or you're becoming an accountant, or a C-suite executive, or even just a mid-level manager, right, in a company, you begin to grow with your ability to actually produce income. And if you've been also, as a business owner, paying your years of dividend of hard work, hustle, eating glass, staring into the abyss, right? When it comes to being an entrepreneur, you've probably also had a couple of successes. You probably put away some money. Maybe you've invested in property, you've invested in different things, right? So you probably also have the ability to invest larger. And I would say that's natural when it comes to just in general, people's investments, their 401ks, right? Their Roth IRAs. It tends to be larger as you get older and closer to that retirement age. So let's just take a look at average check size. Let's start out with the 18 to 29 demographic. Again, kudos, guys. That is incredible that you're investing in startups at such a young age. From the 18 to 29 demographic, it's just under $400 that people are typically investing in terms of their check size into a startup company. If we then contrast that to 70 years old, which is kind of at the other side of the spectrum, it's roughly 3 times that. People who are 70 years old or plus, they're typically investing around $1,400, a little bit over that, when it comes to their check size, writing into as an investment, a startup investment into a company. The next would then be 60 to 69. If we're going down here, this would be 1,200 or a little bit over that. We get to 50 to 59 is just under 1,200. 40 to 49 is around $1,000, and then 30 to 39 is around $700, maybe a little bit less than $700 in terms of the check size. So when I have someone who books a call with me, my individual coaching call, or is taking my free course on equity crowdfunding, which you can check out at crowdcrux.com/equity course, and share with you exactly how to raise raise investment capital from other people that are angel investors, investment capital from the crowd, get funding for your startup business. If you want to launch a successful equity crowdfunding campaign, go and check out my free course at crowdcrux.com/equity course, or my book. I have a great book out there on Audible called Equity Crowdfunding Explained, and I'll include the links to both of those down below. But one of the common questions I get is like, okay, Sal, how much are people going to be investing in my startup company? And I always think about that. And I'm like, you know what? When it comes to Kickstarter and Indiegogo, it's usually around $50, right? Or maybe even a little bit more. But with equity crowdfunding, I've seen it be so much higher. So you could be doing a Kickstarter campaign and raising money and be getting like maybe $50 to $100 of people that are contributing to your campaign or pledging money. Or you could do an equity crowdfunding campaign. And even at the lowest, 18 to 29, people are investing around or thereabouts $300 as an average check size. And on the more median, we'll just say like 40 to 50 to 60, it's closer to around $1,000 to $1,200 that they're investing in a startup company. I usually give people more of a reasonable idea, like around $800. But as you can see by the data here, it's actually higher. But I try to give people a reasonable expectation when it comes to that. So first of all, that would be the biggest takeaway, is that if you're going to be raising, say, 100K, that is going to be comprised, if you think about like a pie chart, right? Pie chart, really fancy, graph. You can think of it as a certain percentage are going to be coming from friends and family, a certain percentage coming from angel investors, maybe some larger checks in that way. The average person is probably going to be investing around $1,000 into an equity crowdfunding campaign. And if you have 100 people, you've raised 100K, right? Based off of that. But the number composition is probably going to be a little bit different. A really great point here, again, by Sherwood Neese, and this is the Crowdfunding Capital Advisors, just to reiterate that. These guys actually as well looked at the platform comparison, and according to them, quote unquote, WeFunder appears to have a higher average investment across all age groups than Start Engine and Republic. This could be attributed to the fact that they had the highest percentage of investors in the 40 to 49 age bracket. On the other hand, Republic had the lowest average investment, but the highest percentage in the 30 to 39 bracket, and twice the average number of investors in the under 30 group. This could be driving the lower average. Start Engine, with an average check size in the middle of the two, had investors distributed fairly even in the 30 to 39, 40 to 49, and 50 to 59 age group, representing 70% of all their investors and keeping the average check size steady. So I wanted to read that because, again, I am not biased here. I don't work for any of these platforms. I work for you, for the people that are booking individual coaching calls with me, for the people that are taking my courses, my programs, my books, right? The people that are hiring the agency that I have as well to help with launches, right? I really work for you guys. And what I want to take away from this is that according to the data, their quote when it comes to this, WeFunder has the largest check size. And that's one of the reasons why I recommend them, why I have so many videos out there on WeFunder. There are many other reasons as well. But I would say they're kind of the leader of the pack, then going to Start Engine and then Republic. Nothing against these platforms. They're all great, incredible. I actually love the UI of Republic. I think it's really cool in the way they're also diversifying across many different asset classes when it comes to their platform. I think Start Engine is doing an incredible job. Their secondary marketplace, they have so many cool stuff that's going on with Start Engine as well. I also had the founder on my podcast. You can go and listen to that episode. But just to give you some data there, that is the answer when it comes to check size. So let's go through some takeaways for investors and also for entrepreneurs. I think the cool thing when it comes to the investors is that I do think it's a good that the regulators do play kind of referee, and I do think it's great that there is a limit when it comes to how much you can invest. I mean, if you're investing, let's just say $900 into a startup company, you're not going to be losing your life savings, right, over the course of your life. On the flip side, I think it's awesome that startups are able to raise money from a bunch of investors and actually be able to get almost like an angel investment round going that way. I do think it'd be great if we had the limits raised from 5 million to closer to like 10 million. I do think it'd be great if we could raise those limits so more people could participate in this new way of raising capital online. But I then do also think that there probably will be more regulations that come with that as well. If you are a startup founder, this is a great time to actually raise capital from the crowd. Go direct to the source. If you're an established business, you can raise money from your customers, from previous investors, and from the crowd. And while VC capital, venture capital is drying up and a lot of angels maybe aren't participating in those rounds, this is still white hot when it comes to equity crowdfunding. And I think that's because of the power of the internet and people investing beyond just wanting a return, but also believing in your mission, believing in you as a founder, and wanting to make a difference. Go and check out all the links for this video down below when it comes to booking an individual one-on-one coaching call with me. Website, crowdcrux.com. You can go and check out that website and contact me there. And lastly, my free course on equity crowdfunding. Really recommend. So easy. It's free. You enter your name and email. You'll start getting some lessons from me. Go and check that out down below. But my name is Salvador Briggman. My friend, if you do nothing else, take some action. Take some action towards your goals this week. Get your hands on some great information, some great education, right? And take a Sunday or take a Saturday to read a great book. Something that's gonna plow or move your life forward, that's really improve your skill set. I hope that you're learning, sharpening your skill set, and being like a sponge, absorbing all that information into your brain so you can one day launch an effective campaign. Again, my name is Sal, and I will see you next time.